Hey, good morning, everyone. My name is Mike Piwowar. I'm the Executive Vice President of the Milken Institute's MI Finance Division. Welcome to our session on innovative approaches to financial inclusion. Just a quick commercial. The Milken Institute is a nonprofit, nonpartisan think tank dedicated to building meaningful lives with a focus on financial, physical, mental, and environmental health. We have offices and staff throughout the world, including my colleague Ana Cespedes, who's located right here in Mexico City. I want to thank the U.S.-Mexico Foundation for hosting this great forum, including this important topic. In particular, I want to thank Enrique Parrott for convening so many people in the public, private, and nonprofit sectors in North America. This panel will feature experts who will tell us how their organizations are developing innovative approaches to financial inclusion, which is an essential step on the ladder to economic and social mobility. Now, we will reserve time at the end of the session for questions and answers. If you want to ask questions, there will be people with microphones walking throughout the tables that you can answer our panelists. So before I turn to our speakers, I want to share just a couple of statistics on financial inclusion in Mexico. According to the 2021 National Survey on Financial Inclusion, 58% of the Mexican population has at least one formal financial product, and that number represented an increase of about 6.4 million people since 2015. So on the one hand, there's great progress. On the other hand, there's more to do. And according to the 2021 National Survey on Business Financing, 90% of Mexican SMEs have at least one banking product or service, up from 81% in 2014. So great progress in that area. So now let me turn to our panelists for our opening round of questions. Martin Cabrera, let me start with you. You're the founder and CEO of Cabrera Capital, a firm that provides investment banking and full-service institutional brokerage services worldwide to a diversified client base. Tell us about your business and the role that you play in fostering financial inclusion.
Sure. Mike, thank you. And also, I just want to thank Enrique and Claudia and also Emilio for putting on this conference. I know it's something that's extremely important. And for all of the folks that are here, and as Mike had mentioned, our company, Cabrera Capital, we are the largest Latino investment bank in the United States. And we're investment bank and institutional brokerage. So we work with major corporations and municipalities, cities, states, and governments, and pension funds. So to give you a sense, last year we issued about $260 billion worth of transactions for corporations and municipalities, and also work with several pension funds on our trading desk. So we trade here in Mexico, as well as in Latin America, the United States, of course, but also in Europe and Asia. And we have a real estate group as well, where we're working on different projects that are 450 million, looking and serving in some of those communities in the Latino community in the U.S. markets, not just in Chicago, but also kind of throughout the country. We're headquartered in Chicago, but we have about 9 offices throughout the country. And it's important for the inclusion issue. I think it's something that we started back in 2003. And we deal with the pension funds in the United States. So in the pension fund industry is about an $80 trillion industry. And this is where all the power and the money is at. But you never see any Latinos there. Whether it's kind of from the US Latinos or Mexicanos or even for others in Latin America. But one of the things that we came to realize is that we started pushing this issue in 2003. And when you look at what's happening to the US Latino market, the US Latino buying power is $2.8 trillion. So that market is taking off. It's roughly 22% of the US GDP. So that what's being driven in the US markets, and it's helping Disney and Apple, and all those companies fuel their growth. It's being driven by this US Latino market. So when you look at kind of inclusion, we kind of focus on the pension funds because that is where all the power and the money is at. And we could take the state of California, where there are 42% Latinos in the state of California. CalPERS, one of the biggest pension funds, $500 billion. California State Teachers, $350 billion. But when you look at the business that they are doing with Latinos, it's a half of 1%. Meaning, so for every dollar that's being spent, Latinos are not participating in 1 penny. It's just 1/2 of a penny. So that's where we kind of look to push to see the inclusion for private equity, venture capital, and real estate, and money management, where it's trickling down. And it's really, as you start to see some of those companies and public pension funds come into, they start analyzing, okay, this is our demographic. And what it tells us as Latinos in the US, and we have to bring up those tough questions, is that every 2 weeks, our Latinos that are working for government, their dollars, their checks are going into the pension fund system. But then we're not able to manage those assets. So we are good enough to put our money into the pension fund systems, but we're not good enough to manage those assets. And that is where we're changing. But that change, as Latinos start to get access to the capital, you start to see those disparity gaps in the country start to close as well. And that is some of the advocacy work that we do. And we work with some of the corporations kind of here. And I know Monica Lozano's here with Apple. She's pushing hard on the board of directors at Apple to make sure Latinos and others are included in diversity. And that is making a significant change.
Oh, that's fantastic. We, just as a couple years ago at our global conference, we had Melody Hobson, the CEO and founder of Ariel Investments, and she was talking about the fact that we have not moved the needle very much in terms of DEI efforts in asset management. And the fact that you've been in this space since 2003 and continue to work in that, kudos to you, and thank you for your efforts there. So Carlos, let me turn to you. You're the CEO of BanCoppel, which offers banking products and services to millions of Mexicans. Your goal is to offer financial services to lower income individuals who've been historically excluded from traditional banking. So tell us about how you achieve that goal and how that goal improves financial inclusion.
Thank you, and thanks for the invitation to this panel. I think Coppel is a 80-year company lending to unbanked people. I think 70% of our clients, we are their first access to the financial sector, in both in having an account, but also in having a line of credit with us. Then I could say that maybe we are the main participant or the main financial institutions really providing formal financial services to the unbanked or the underserved people in the country. I think we have a variety of products. We are one of the top 3 issuers in terms of debit cards in Mexico, and the majority of our customers earn less than $1,000 per month. We have 25 million clients with a department store or with a credit card or a personal loan coming from the bank. And what can I say that about how we originate our portfolio of loans and credit card? I could say that we have a non-traditional approach for originating loans and cards, different than the traditional banks. We have during 80 years collecting data from the segment, and that data exploded in a different way, have allowed us to really understand how are the behavior and the willingness to pay of the low-income segment in Mexico. Then our proprietary models, I could say, is one of our competitive advantage and the main tool that we have for really serving underserved people in Mexico.
Oh, thank you. So 80 years, wow, quite a history in that. So very, very, very nice. Lorenza, let me turn to you. You're the CEO of Actinver, a leading wealth manager and investment bank in Mexico, providing services to individuals and companies. And your stated mission is to help customers increase and preserve their wealth. So tell us about how you accomplish that mission and how that mission improves financial inclusion.
Thank you, Matthew, and well, thank you for the invitation for this event, and congratulations to put together such a big number of people interested in this relationship between Mexico, US, and Canada. I think it's important to continue working in these type of forums to see the advantages that we all have of working together and investing in the region. Regarding what we do in Actinver, as you mentioned, Mike, we work mainly in investment. We are a bank that have all different type of products, but our major interest is on bringing investment products to people. We are the 5th player in investment funds. And since the beginning, the interest of Actinver has been to two things. One is to help people to understand investment. I think that in difference with other type of financial products, this is much more difficult, and people in general is very conservative in terms of their investment. They feel very concerned about risk, and understand the balance between risk and return is a very complicated issue for regular people, or even for people that know about investment. Like in times like these ones, really are concerned about their investment. So one thing that we do is to work on how to bring investment to people in an easy way, and to help them understand, not to become an expert, because I think that very few people really want to become an expert, but what is needed to be able to build the wealth that is needed for either for retirement or even for any objective. And one thing that we do in that matter, and that we consider that help in terms of financial inclusion for investment products, is El Reto Actinver, which has been in place for many years now. And what it does is a big event, which is like a challenge that includes, on one hand, courses and conference from different levels, from the beginning to the more advanced, depending on where the investor or the customer is. And also a simulator where people can start testing the portfolio theories and portfolio investment strategies without putting their money. But it's a real data, and on real time they can see how markets are doing. So this has been very successful, and especially for young investors, and to include them in the world of investment. And the other is to develop products for the first-time investors. Traditionally, Actinver has been, as other banks focusing, or institutions focusing investment, for a upper level or for more top segment. And thanks to digital technology, we have been able to lower all these and have products accessible. So now we have our digital bank, which specializes in investment, which is called DINN, D-I-N-N. And it has been very successful for young people, and even not as young as we think, of 20 years. Like the average of our client, the average age of our client is around 30 or 33 years. So, but many of them are the first time that they are investing, and they really value the fact that they have interest in their debit account. So in these years, or in these months with high inflation and high interest rate, bringing these options for maintaining the value of the money, I think it's very important. And in addition to this debit account, just which is important, so that people know that the value of the money is important, and the opportunity cost of having the money either in a bank account that doesn't give any interest, or that is not invested, implies a big cost. And the second is to start giving them portfolios and diversified in terms of fixed income, in terms of variable income, and depending on your profile, we offer different portfolios. So it's and from there we go to the upper level of the segment. But I think in terms of financial inclusion and for new things, it's something innovative, and that it has been turning very successful for this segment.
Yeah, thank you. A couple things we're going to return to later in the conversation. One is you mentioned the role of technology, which we'll get to next, and then also talk about the important role of education and the creative ways that you all have been doing that. But before we get to technology, let me turn to Jon Richter from MetLife. You're the Chief Sustainability Officer at MetLife, a global financial services firm headquartered in New York that operates in more than 40 countries, a huge global footprint. Tell us about that, but more importantly, tell us about your commitment to Mexico and how MetLife is fostering financial inclusion.
Great, thank you, Michael. First, let me say it's a pleasure to be here, and I want to thank our sponsors, our hosts, and the organizers for this really important event. It's been terrific to hear from my colleagues, and at the panel yesterday, learned a lot of terrific information about how we can all work together to create solutions for North America. Correct, MetLife is a 154-year-old global company. We're one of only 11 companies in the Fortune 100 to make it past that 150-year-old mark, so we've got a long history. We operate in 40 countries, 40 markets around the world with approximately a little bit under 40,000 employees. And we like to say we're a purpose-driven company. Our purpose is always with you, building a more confident future. And a lot of what I'll talk to today on the financial inclusion front ladders up to that purpose, or our purpose infuses a lot of those efforts. In Mexico, we have a significant presence. Mexico is our third largest market. It is our largest market in Latin America. We've got approximately 8,000 employees and sales agents in the country. We operate in all the regions, in all the states. And our business covers, and I just found this out recently, but our business covers almost 10% of the population of Mexico. So almost 10% of the population here have some type of MetLife coverage in place. And our products primarily service moderate to low income people across Mexico. So I'll actually come back to that, I think, a little bit later in terms of inclusion and what that means for bringing in people so they have more opportunity. So, in terms of my role as Chief Sustainability Officer, a lot of people wonder, what is sustainability? Is it just environment, climate? Is it ESG? The way we look at sustainability at MetLife is very broadly and very holistically. And my role is really to make sure that sustainability, or ESG, is integrated into how we operate, into what we do with our products, our services, our investments, how we treat our workforce, what we do for communities, and how we are stewards of the environment. And so we've created, that's everything, right? Sustainability, ESG covers everything. So we've created a strategy to include some focus areas, and our focus areas are focused on a subset of the United Nations Sustainable Development Goals. And so there are 17 UN SDGs. Our sustainability strategy aligns to 5 of them. And roughly they boil down to gender equity, equity and inclusivity, economic development and growth, health and wellness, and climate action. And so what we do as a company on the sustainability front, and what we do as we ladder up to our purpose, everything fits into that sort of lens. And financial inclusion, obviously, and financial health more broadly, falls very much under the equity, inclusion, gender equity, economic growth. So we do a tremendous amount, I think, to help advance those goals. So it's always been in our DNA, financial health, financial inclusion, building more confident futures, always been in our DNA, and now it's sort of built as part of our strategy as well.
Thank you, Jon, for that. So Lorenza, let me come back to you. You mentioned the role of technology, and I want to talk specifically about the role of financial technology, or fintech. We've seen that the greater use of technology and financial services offers the promise of lower costs, greater innovation, potentially leading to greater financial inclusion. And over the past few years, we've seen really the fintech industry evolve and transform. The early entrants were so-called disruptors. They all wanted to operate outside the traditional financial services system and create new institutions. Over time, we've seen the most successful financial services firms actually find ways to partner with existing financial institutions and offer new products and services. And at the same time, we've seen the traditional financial institutions have developed their own in-house financial fintech solutions. Now, in terms of Mexico, on the one hand, fintech has made inroads in Mexico, particularly since the fintech law was passed in 2018. And according to research we looked at under the law, about 40 fintechs have been authorized in Mexico, of which 26 are institutional electronic payment funds. So, there has been some movement in terms of using fintech for payments. On the other hand, cash is still king when it comes to retail customers in Mexico. What's your perspective of growth on fintech in Mexico?
Yeah, thank you, Mark. I think that technology has done the big improvement and probably the movement towards financial inclusion faster than what we ever expected with regulation, with government programs. So the impact of technology has been huge, as you mentioned, and it goes even beyond what you mentioned about the regulation. The regulation has been very important for a specific segment in terms of fintech, and that is, as you said, in payments especially, because they are getting the money of the people, the wallets, and with that doing payments, and that has been very important. But the impact of fintechs go even beyond that, and probably, as you said, this partnership between all the firms that are bringing the new technology and also a new way to see the market and to serve the market has been complementing the traditional institutions. And there's a complement or cooperation important because when we talk about the money of the people, it's also very important the credibility and confidence on the institution that they are putting the money, and especially we that are in the business of helping the people to manage their wealth and to building a wealth. Trust is very important. So sometimes a new firm that is entering to the market might be very efficient in knowing the customer, in bringing new products, or doing that in a very efficient and very user-friendly way to the customer, but probably doesn't have the trust for the customer. It is not regulated, it is not known as an institution that is going to go over the years. So this partnership brings the best of the two worlds. On one hand, the trust that some institutions have been building for a long time, and also the innovation and the knowledge of the customer and technology to make this possible. So this has been a way to improve inclusion, because we can have products specifically for each segment. This vision of one fit all is not longer valid, and it's possible in a very efficient way. In the wealth management sector, it used to be a very expensive thing, because you have to have a portfolio specifically for each person, depending on their needs, on how is their tolerance to risk, etc. But now with technology, we can do all that in a very personal way. But one thing that we have seen that is very important and in the segment, and probably it is relevant not only for investment but also in other markets, is this interaction between the digital part and the presence. So we see that the clients are very interested in having the best way to access their money and to see all the time how they are getting the returns. It's amazing that the best contact with people is through giving them how their investment is doing. So they enter to the app more often than even in transactional apps, the ones that for payments. They don't enter all the time because they are not doing transactions all the time. But they are interested if their money is increasing, and so it has been something very important to maintain the contact with the client. But on the other hand, when they want to know, well, the market is going down, I see that I'm losing 5% of my investment, what's going on? So to have someone to tell them, well, this is what is happening and don't panic, this is going to return. Yeah. Or on the other hand is that I want to buy a house. How should I start to save for a house? So sometimes some of these things can be done with artificial intelligence and with data, but there's always important to have a person to do that. So that's at least what we have seen in some of our with some of our clients. So this interaction between digital and presence and traditional or trust and digital thing has been very the best for the world.
Yeah, I see, Carlos, you want to jump in here, right? Yeah. So this mix between the traditional, somebody coming into a Coppel store and opening an account, but also the ability to go digitally too, right? Is that something you see in your business?
Yes, in terms of technology and complementing what Lorenza was saying, I think there are many things that have happened in the last years about technology that are very important for the financial system, but also for financial inclusion specifically, to serve better underserved people. And I think, of course, there is now cloud computing that was not there before, and fintechs are really taking advantage of cloud for being more agile and having lower costs when they expand their volumes. And that has played a very important role. And now traditional banks and also regulators are allowing traditional financial institutions to start using the cloud. And that is playing an important role for decreasing the cost of serving people. The other important part of technology, I could say, is how it's the new architecture for financial systems. Talking more now about microservices and a new way to create all your architecture in terms of IT that is also being in place with fintech companies. And I think they started first, but traditional institutions are also moving and taking advantage of those new technologies that will allow to decrease costs and to really serve better a chunk of the population that was not served previously.
Yeah, thanks. So Martin, I'd love to get your perspective here in terms of, looking back, what aspects of financial technology has transformed your area of business the most, and then looking forward, what do you see as the biggest promise?
So Mike, I think for us, we have clients that are in the music and entertainment business, and you can look at some of the bands, Grupo Firme, kind of Bad Bunny, Los Tigres del Norte, and they're selling out 3 days in the LA Rams Stadium. And also there's Live Nation. I joke about it, but it's like all the big white firms are now realizing how much the buying power is. And so Live Nation, who puts on Lollapalooza, sells several tickets. It's the biggest concert in the United States. And now they started Sueños, which is focused on reggaeton. And they sold out 50,000 tickets in about 2 days, where it takes them 3 months to sell Lollapalooza. And what you're starting to see, there's charreadas, there's soccer games, there's concerts that are being held in all of these big stadiums, and they're being sold out. So now with technology, folks are trying to see, do we give them a wristband that they can go and buy their Modelo beers on their mixed drinks, but they see all of that technology, and they're looking at all the data. And the data is important because of their buying habits, and everybody wants the data and the artificial intelligence that's coming out of it. And that's where you're starting to see kind of this mega growth, so that even for Bad Bunny, like I didn't know who Bad Bunny was 3 or 4 years ago.
I still don't know who Bad Bunny is.
So he is #1 in the world. He is bigger than BTS. And it's kind of
I don't know who BTS is.
But Well, he is streaming 9.1 billion viewers a year, and he did over 9 billion last year. So everyone around the world is paying attention to the money, and they're following the money. And it's because of the technology that you're starting to see at some of the concerts that they are going to look at what's really important. I know Jaime de Paulo is here with the Illinois Hispanic Chamber of Commerce. They were helping with the Sueños concert to understand this Latino market. And when you have all of the technology coming and you have all these businesses growing, you don't have the capital there. So that's when the BanCoppel and some of the companies in Mexico, they see that we know how to bank the folks there and take our technology and utilize it in the United States for that huge kind of buying power. So you're going to see more of that for the data analytics, the artificial intelligence, and how it's going to just shape the amount of buyers for the U.S. Latino market.
Wow, when I was thinking about this session on financial inclusion, I did not have Bad Bunny, reggaeton, or Modelo on my bingo card. So
it's happening, it's booming, it's big, it's huge, and even here in Mexico too.
Oh, this is great. So John, let me come to you, right? So obviously MetLife, huge global corporation, right? One of the things, we did a study on InsurTech, which is fintech in the insurance industry at the Institute. What we found was that there wasn't a lot of disruptors. It was immediately the fintech sort of up-and-coming companies wanted to be service providers, but then firms like yours are also developing in-house. Tell us about some of those efforts.
Right, yeah. Well, I think just to bring it back a little bit to the last question is one of the most exciting things about fintech is that it's broadening financial inclusion to really include financial health. And so financial inclusion tends to focus on access to bank accounts, access to services. Financial health goes even broader and is about helping people prosper and really manage their money and manage their finances. So I think that's one of the most exciting parts of fintech. There's so many other, gamification, the thought leadership that is out there that you can read and learn how to do a better job with your finances. All of these are critical components to it. MetLife, our fintech approach it moved forward dramatically because of the pandemic, where we had to move things online. And so a very personalized interaction our industry is with signatures that must be on paper is largely regulated sometimes, and to be able to move everything to a person's phone was a massive undertaking for us, and something that we came out on the other side of the pandemic in a much better place. I think it would have probably taken us many more years to move that direction, which we were moving in anyway, but it was a catalyst for us to go online. And it also has allowed us to create our own versions of fintech. We have our own app that is free for anybody who wants to use it, available through download, called Upwise. And the name intends to sort of connote that it's in order to help people prosper. And it is it's a fintech approach. It is a financial health app that anyone can use for free, like I said, to manage their finances, to learn more about their finances. It's got a particular focus too on underserved populations, on diversity, equity, inclusion. There's a lot of information about how women, for example, can help manage their money, for Latinos to help manage their money. It's very segmented, and people can easily find the kinds of information they're looking for. So I would say, in short, we're very interested in fintech, love that it has broadened to be very holistic. And we've leapfrogged from where we were just a few years ago, and even are now developing our own apps and services and these types of things to improve financial health for all.
Yeah, I mean, that's a common story of traditional financial services firms where it's, fintech was kind of a nice to have until the pandemic hit, and then it's you have to have that. So John, let me stick with you, and let's turn to the role of government. So one of the things that the organizers were very good about putting together at this conference was including high-ranking government officials, because it's not just the private sector, it's not just the nonprofit sector, but it's government officials, and the role of government, and the government can play an important role in improving financial inclusion. for their citizens. So Jon, you're obviously a global services firm in the United States. We don't even have a federal regulator of insurance. We have state-by-state regulations, so you have to deal with that and stuff. So tell us about the role of government in how you've been working with them to challenges and opportunities, not only financial inclusion, but as you mentioned, financial health.
Yeah, great. So, particularly in Mexico, we've worked very closely in partnership with the government here in a couple of different ways, working with Conducef, the consumer protection agency here. And it ladders up to the national policy that is in place on financial health and financial inclusion. And we've worked very closely with the government to establish that national policy on financial health and financial inclusion. And that has opened up new doors for us to do a lot more with education, financial education. We support roundtables. We host a number of roundtables each year on the topic, and all of that was sort of facilitated by the relationship with Conducef and with the government more broadly, and ties to the national policy on financial health.
Yeah. So Martin, let me come to you. So we were talking earlier about how you do a lot of work behind the scenes with state and local officials in the United States and at the federal level too. So talk to us about some of the challenges and opportunities with working with government to improve financial inclusion.
Sure. I think for government, and one of the things that we had to explain to our elected officials in the United States and our Latino elected officials, because they're always fighting for immigration, education, and housing, which is great, and we fight for that as well. But what we had to tell them is that you have to follow the money, because as Latinos there in the United States, you can't have political power without having economic power, and it comes hand in hand. And that is something that we are always stressing. And just tell a quick story. There was a bank robber called Tim Sutton back in the day, and the police caught him, and they asked him, it's like, why are you robbing banks? He's like, well, that's where the money is. And it was that simple. And that's what we try to educate our elected officials: follow the money. That's where the wealth and the power is at. That's what's going to move the markets. That's what's going to drive technology and investments. And we try to shape policies for them that are going to be inclusive. And I know there's infrastructure policies. There are different programs. I know recently, with the help of Monica Lozano and Apple Computers, they donated $25 million. And Governor Newsom from California donated $25 million to start a Latino Innovation Hub, the first one in the country that's going to be in California. And they're also going to fund 11 other satellite offices. But it's working closely with government, with business and government, to shape some of those policies, to let them know, here are some good policies. This is how you can be more inclusive. This is how you shape the policy so it trickles down on real estate and private equity and venture capital and investing, and it comes to our communities. But they're having great returns. It's not a token business or anything like that. This is where you're having great returns, and the markets are taking off. And it's funding kind of those businesses through government, but also through corporations, and those policies which are extremely important, and helping them realize that you can make a tremendous impact by shaping these policies in government.
Oh, that's great. So Lorenza and Carlos, I want to come to you. So Martin just mentioned these Latino innovation hubs in California. Are there any examples that you see where you've been able to partner with governors or see how government policies have been particularly useful in financial inclusion? And then following on that, where do you see the role of government in the future, what things that they could do in the future? So Lorenzo, let's start with you.
Yeah, let me go one step back in terms of the importance of regulation for financial inclusion, as you were mentioning. And there's, in terms of financial institution, I think that the most important part of regulation and of government is to maintain the stability and the soundness of this institution. And in Mexico, this has been like a big thing, because we have gone through very different type of crises in history. And this is a very important moment to remember that, because each crisis in Mexico has started with an increase in the interest rate in the US. Mexico, either the government or the private sector was very in debt, So once the interest rates go up internationally, that implies an increasing burden in debt, and with that, unsustainability of this indebtedness. So we have seen that picture several times, and it's amazing that this time, this is not the first time, because we have seen other cycles of increases of interest rate, but probably not as huge as what we are seeing now. And an amazing thing is that what we are seeing is that the pound is depreciating, the euro is also in kind of a shaky part, and Mexico, the Mexican peso has been either appreciating or maintaining its stability. And a part of that is that we have learned as a society, but also because the regulation has been very strict in terms of the reserves and the liquidity that a bank has to have to make sure that it's maintained stable, in addition to the government side. So this is one thing. But having said that, sometimes it's feel that this regulation goes against financial inclusion, because it increases the cost of administrating or running a bank. But there's another one that is more recent, that has been probably more important, and especially for the relation for Mexico and US, and is the regulation regarding KYC and anti-money laundering in general. So there is these remittances and financial transaction between the two countries, and sometimes the concern about being used by illicit activities has been there. So there's a big regulation on that, and there has been some studies that all this regulation that has been placed, especially in the US, instead of helping to reduce all this anti-money laundering, has been only affecting the financial inclusion in Mexico. So there's a big challenge on how to really fight money laundering and all illicit activities, but doing that in a very intelligent way so that we are not affecting financial inclusion. And instead of pushing the illicit activities into the financial sector, sometimes it pushes it out of the financial sector. So I think this is a big challenge that we have in our relationship there.
Yeah, no, I mean, we're starting to see that in the United States, where you have particularly smaller financial institutions. In the US, we have things called minority deposit institutions and community development financing institutions, which play a big role in their communities and their underserved communities. But they tend to be small, and the KYC-AML regulations have a very high fixed cost, which means it's easy for the largest financial institutions and for the largest customers within those institutions to bear those costs and amortize those. But if you have smaller dollar accounts or you're a smaller institution, the more difficult that is. So that's definitely something on our radar screen that we look at. Carlos, I'd love to get your perspective on this in terms of the challenges, opportunities, what's been helpful, what do you think are good areas to look at in the future for government?
Sure, and I think we do you hear me? Yeah. Okay. I think that we need strong financial authorities in Mexico, and I think there has been a history of really rebuilding all our regulatory system here in the country since the 1994 crisis until now, and many different pieces of regulation have been imposed that could be seen, as Lorenza was saying, as costly for financial institutions or for the emergence of new entrants in the market. But those pieces are really helping to maintain stability right now when we are seeing this financial turmoil, international financial turmoil. It has really been useful for us. Then those are good news. But I think the responsibility of some of our financial authorities have increased because of the emergence of the fintech companies and other kind of financial institutions that now they regulate. And I am sure they will need much more resources to really help us continue growing in the system, for having faster authorizations of new business models and to really have better financial inclusion and better regulation that adapts to the lower income people. And that's something that we should take into account when we talk about our financial systems in terms of our relationship with the government. That's important.
All right, thanks. So the next round of questions I want to turn. We talked about the role of technology, the role of government. I want to talk about the role of the nonprofit sector and how we can be helpful in that. But and Carlos, I want to stick with you. But before that, I want to remind folks we're going to leave some time at the end for questions and answers, and there will be our organizers will be walking around with some microphones if you want to ask some questions for our panelists up here. So Carlos, as I mentioned, we've talked about the role of technology, the role of the government. You have a number of folks of what we call civil society, nonprofit institutions. We have think tanks like myself and our brethren in that. We have academic institutions, foundations, community organizing organizations here. How can we be helpful to your efforts? We've all talked about the role in terms of the private sector and the role of government and stuff. What can we do to be helpful, whether it's on the research side or it's on the convening side or those types of things?
I think in terms of financial inclusion, we should continue working the different sectors for really improving it. I think in terms of research, there has been a lot of research that have come from nonprofit institutions or from the government also to really understand what is happening with the underserved people. And I think we have discovered that financial needs of the lower income segment are much more complex than the financial needs of us, of the higher income segments. Why? Because they have a lot of uncertainty in their income and the way they receive their money and the formality of the money that they receive. And cash play an important role there where you become blind to really evaluate those clients in order to serve them better. Then all that we can do in terms of research, of understanding how those portfolio and how those segments behave and in the construction of better products, of better services for them, it would be very important. And we need the help of the government in order to increase and to improve regulation of universities, of nonprofit institutions, really understanding that and helping financial institutions to really provide better financial services.
Yeah, so John, let me turn to you, right? So Carlos just mentioned research as one particular area that we could be helpful. Any thoughts on that or any other ways that?
Absolutely, yeah. I'll come to research in a moment because MetLife does sponsor. We conduct a lot of research on our own. We also sponsor a lot of research done by third parties on financial health, financial inclusion. But I think you've raised or you're focusing in a critical area here: the role of the NGOs, the role of the nonprofits. There are so many tremendous organizations out there whose sole purpose is to advance financial health and financial inclusion. MetLife Foundation works closely with many of them. In fact, MetLife Foundation has given out over $250 million in grants to help support these organizations and the work that they do. We work with many of them because part of our strategy for our foundation is financial health. There are 3 pillars. It is one of the 3 pillars, in addition to community efforts and upskilling the labor force. Financial inclusion and financial health has been a significant focus for our foundation for quite a long time. And in Mexico, just to bring it home locally, the Mexico version of the foundation is called Fundación Mexico. They work directly with Sesame Workshop on programs to educate, to help bring information particularly to women and girls, young girls who are just sort of, the philosophy of Sesame is start educating people early on so they can learn how to incorporate and prosper from a financial health perspective. We also work with groups like Trickle Up, another organization that's doing tremendous work to help advance financial health. So I think the NGO sector, there are so many organizations who are doing such a tremendous job, and it's all they do. They're very good at it. And to the degree that corporations and others can partner with them, that they can be facilitated and unleashed is critical. And just to bring it back to research, a lot of those organizations and a lot of the work we do is providing white papers, thought leadership, information to help create more of a surround sound around financial health.
So Lorenza, right? So we've got research, education. Thoughts on that?
Yeah, and I think that and a lot of what you do in your institution is to think financial education, but in a more I don't know if it's smart or advanced way. Like probably I don't know, 20 years ago we thought that financial inclusion, that the problem of financial inclusion was financial education. People don't know, so that's why they don't use financial products. But what we have learned, part because of the practice, not so much about the work of think tanks and the government, is that the problem is that the products, and we as financial institutions don't develop the products and don't give the products, the right products for the people, and depending on their needs. Just to comment one example. One thing is interest rate, for example. For some high level to think in interest rate and to see the balance again with interest rates makes a difference. But probably when you have smaller balance and having 5% interest rate or even 10% interest rate is so much a small amount that probably doesn't make a difference. But what it makes a difference is to have an auction or a lottery of certain products. So in terms of expected value might be the same, but it is more important to have a blender or to have a car than to have the same expected value in terms of interest rate. It's against theory because we think that people is risk averse, so it prefers a certain amount than the unexpected, the same expected value but with risk. But it's the opposite because at the end they have something certain and probably of more value. So understanding that, or the way financial institutions give the information in terms of commissions or in terms of the fees that we are charging. In an example of distributing the money of the government to in poor areas, what people saw is that the reason why they were not using banks is because they lose the information of their money. But when they started to give them the information through ATMs, so people started going to the ATM probably 3 times a day to see that the money was there.
Wow.
And they were taking the money out. But once they understood and they saw that the money was there, that there was not fees, they started to consult the balances less and less often, and they left the money because they have the certainty that they were not hidden fees. So it's very complicated to understand the behavior of the people and why is that they are not adopting certain products.
Yeah.
And the work that all these institutions like yours and others do in that sense, and in coordination with the financial institution, because sometimes it's to coordinate, to have the knowledge and to put it in practice to see what works and what not. I think it's very important. We have learned some things, but I think there's too much to learn and to work on that area.
Yeah, no, the role of different nudges and things to like help people and consumer behavior and those sorts of things, or like John talked about gamification and those sorts of things. So Martin, let me turn to you. You and your firm have a long history of working with community organizations such as Cristo Rey and some of the other things. How can the nonprofit sector be most helpful in this area?
Just to reiterate, in the United States, we have 63 million Latinos. 85% of them are Mexicanos. And I was born in the United States, but I consider myself Mexicano when people ask me. And what I tell the folks here in the businesses, and that's why this conference is so important, that those companies in the United States are not being served by some of the banks and the access to capital issues. And that's where the opportunity is for some of the Mexican businesses, as you've seen more and more come to the United States and tap into that market that they know, that's family, and that it's a huge market. You've had some of the people here, Antonio Villaraigosa was the mayor of LA. Now he's overseeing $100 billion for the state of California in infrastructure funds, and how he's looking to be more inclusive with those dollars. And you have some of the others kind of that are here as well in government that, you know, you have the mayor pro tem from California as well. He passed secure choice for some of those underserved kind of folks, that they would have a 401k so that they have investments. And I know he's speaking here as well, but that's gonna be a $40 billion fund. And that is something where you start to see those dollars and people start to pay attention to it. The non-for-profits of how they can be helpful. And we talk about creating wealth, because what we talk about is giving back as well. As our companies grow, we know our community, we know our gente, we know the non-for-profits and the churches and the schools that we kind of donate to. But it's really comes to when we are out there speaking to kind of those issues, and we see that there are those opportunities, and whether we're talking to the President of the United States or the senators or the House members, as Latinos we're talking to them. But when you have the Milken Institute and some of the other think tanks start to see, these are the numbers, this is a growth, this is about business and the opportunities, and that money is gonna recycle back into our Latino communities. That's where kind of the impact has, because we are saying it as Latinos, but when you start to see the big institutions, the BlackRocks and the Blackstones and the Milken Institute start to say that this is good business, this is what we need to do to shape the markets, and that's trillions of dollars, then you start to get the credibility. So that's something that is probably the most impactful thing that the NGOs and the non-for-profits can do.
Thanks. So showing that you can do well by doing good is a good way to sort of put that. And thanks for putting us with the BlackRocks and the Blackstones. That was very good for you. So I think we have time for one question from the audience, and then do we have organizers there's a question right over here. Do we have, somebody have a microphone, or do you just want to, go ahead and yell it out. I'm not sure the microphones are ready. Go ahead. Oh, here's the microphone, yep.
Hi, thank you so much. I think that the advantages of, let's say, this digital financial inclusion are pretty clear, but I'd like to dig in a bit into the disadvantages. Of course, you get closer to reward, but I think this also gets you closer to risk. So how can we mitigate this risk? How can we overcome all these caveats and, let's say, disadvantages that these, for example, misinformation, social media, and all these other disadvantages there are?
Carlos?
I can take that one. Because we have been dealing with a higher risk in this segment for many, many years. I think the approach of evaluating this kind of clients when you are lending money, it's completely different. We don't even ask for income proof when we grant them a loan or a credit line. Then we are using other variables to really understand the willingness to pay and really the capacity they have for really repaying their loans. Of course, we are managing 3 times the delinquency rate than a traditional bank. And our risk parameters are completely different. Of course, our interest rates, of course, are higher. Of course, it's more expensive for this segment because of the higher risk they represent for institutions, because we have much more delinquency. But if you manage it well and you introduce different variables, non-traditional variables in your assessment of clients, you could really have a profitable business. And that's what we have at the same time that you provide access. And then there's a ladder of different products that you can provide to these clients, because maybe you start with a higher interest rate, but if you prove that you are a good payer and that you have a history, then you can get access to other cheaper products or better products than the first ones you have. And that's what we need to work on in that ladder of products that brings a people from not having access to really have the best access to the more sophisticated products as the ones, for example, Lorenza was mentioning before. Then there's a way really to assess the risk of this segment.
Right. And with that, we are unfortunately out of time. I first want to thank the organizers of the North Capital Forum for allowing us to have this important conversation with such distinguished guests up here. And obviously, I want to thank our speakers for having a wonderful and frank discussion. We're all in this together, and I look forward to how we can all improve the financial inclusion of society and all of our financial wealth in this in time of uncertainty. So thank you all.
Thank you.
Thank you.
Thank you, Mike. Thank you.